Welcome to Informed Investor. Yet again, another IPO opens for subscription, which goes by the name Nova Agritech. In this video, we will discuss about the business model of Nova Agritech and the industry it operates in, followed by the financials of the company and lastly the valuation. First up, let's understand the business model of Nova Agritech. As the name suggests, Nova Agritech is an agri-input manufacturer that helps farmers grow crops better. Their main forte is into three concepts, which is soil health, plant nutrition, and crop protection. The company focuses on a tech-based, farmer-driven solution approach and provides R&D-driven, ecologically sustainable, and nutritionally balanced products. The company manufactures, distributes, and markets a broad range of product categories, including soil health products, crop nutrition products, biostimulants, biopesticides, integrated pest management products, new technologies, and crop protection products. Nova Agri Sciences, a subsidiary of the parent company, deals with the crop protection segment and offers products on insecticides, fungicides, herbicides, and plant growth regulators. So all in all, the Nova Group boasts a total of 720 manufacturing licenses and has about 36 registrations in the pipeline. In addition, their dealer network is spread across 16 states and a few countries like Bangladesh, Nepal, Vietnam, and Sri Lanka. Let's look at the IPO details. The IPO opens for subscription today and closes on January 25th, 2024. It has fixed the price band at 39 to 41 rupees per share. So for a retail investor, the minimum lot size would be 365 shares, translating to a minimum investment of 14,965 rupees. Nova Agritech plans to raise about 143.8 crores from the public, out of which a majority or 78% of the issue would be a fresh issue of 112 crores, while the remaining 31.81 crores will be an offer for sale, which means the existing promoters and shareholders are selling off their shares. Post the IPO, the promoter shareholding will drop from 84.27% to 59.39%. The IPO has the following reservations: 30% for anchor investors, followed by 20% for qualified institutional buyers, 15% for non-institutional buyers or HNIs, and lastly, the retail quota of 35%. So what are the objectives of the issue? The primary reasons of the IPO are to raise funds towards their investment in the subsidiary Nova Agri Sciences for setting up a new formulation plant. Second is for funding capital expenditure in the company towards expansion of the existing formulation plant. Third is for funding the working capital requirements of the company, and lastly for general corporate purposes. Nova Agritech Limited caters to the farmers and the agricultural sector. In context, agriculture is the primary source of livelihood for about 58% of India's population. As a result, the share of agriculture and allied sectors to the total economy's gross value added or GVA has been significant and has increased over the years. As of 2022 to 23, the agriculture sector is the largest employer of the workforce and accounted for a sizable 15.1% of the gross value added of the country. While agriculture continues to be a significant part of the Indian economy, the quantum of arable land in India has remained constant for almost a decade at around 154 million hectares. And with the increase in population and the arable land remaining almost constant, the crop protection industry's role becomes very critical to ensure that food grain productivity is enhanced. And that's where Nova Agritech comes in, providing products into the crop nutrition and crop protection via its diversified product portfolio. Now coming to the financials, after a dip in sales during the COVID outbreak, the company recovered and the revenue grew at a CAGR of 9.5% from fiscal year 21 to fiscal year 23. The company maintains healthy EBITDA ratios, with the last two being around the 18% mark. When looked at the bottom line, the company reported profit for the last 3 years. The first half of the fiscal year of 2024 saw the company reporting a net profit of 10.38 crores, showing a decent trajectory for the remaining second half of the year. The ROCE, which is the return on capital employed for fiscal year 23, was healthy at 27.25%. When looked at the debt element, the company has employed a considerable amount of debt in the last few years, with the latest net debt amounting to 17.5 crores as of fiscal year 23. As a result, even the financing costs have increased in fiscal year 23 to 8.5 crores. When looked at the valuation of the company as compared to its peers, based on the upper price band of rupees 41 per share, the price to earning ratio of Nova Agritech trades at 12.5 times, which is fairly priced. The highest PE in the industry stands at 41.93 times, while the lowest stands at 9.35 times. The average industry PE stands at 25.64 times. Moving to our last segment, which is the strength and weaknesses. Let's start with the strengths of Nova Agritech first. The company is a one-stop solution for agri-tech products with a diversified branded product portfolio. It has established a distribution network across various geographies. Moreover, it is also focused on educating farmers on crop management practices through its Nova Kisan Seva Kendra, which is a farmer outreach program. Lastly, it has a technology-driven product development process and a dedicated in-house R&D facility. The weaknesses are as follows. The company can be negatively impacted if there is any change in the government policies towards agriculture sector or reduction in incentives or subsidies provided to the farmers. It exhibits concentration risk as a majority revenue comes from Andhra Pradesh, Karnataka and Telangana. Lastly, the company needs to maintain various licenses and permits along with the high working capital requirement. Having said that, this is me Rahul signing off. Have a great day and stay safe.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment related documents carefully. Visit www.researchandranking.com.